So we're talking about foreign tax credits now, okay? Foreign tax credits. Okay, and now, this is the old system. This is the old system, but this is the new system. There are two baskets, general income, passive income. General income and passive income. So let me draw. And this, actually, we're sort of halfway through this chart, but let's get this chart up here and you'll see it much easier what we're going on. All right, so we're looking at double taxation and foreign income tax credits. Okay, all right, so what's our first part? All right, we've got direct, which is like an individual, or branch office. All right, straightforward. All right, and then we've got indirect. Wow, what's indirect? Well, this is a subsidiary. Let me just pull this out. What have we done so far? Let's have a deduction approach. Okay, and that's where we look at foreign taxes. Okay, in other words, all foreign taxes. That's what a deduction approach is, right? So, and what about credit? What are we doing here? Well, we're just giving you a credit for your income tax paid. That's all. Income tax only. Okay, that's what we've done so far. We're over here now, and we're going to look at the subsidiary side. Okay? All right, we've just done this branch, okay? And what did we learn here was, well, in most cases, this is going to be a dominant strategy that you'll follow. All right? Okay? Because in most countries, the income tax you pay is sort of as much, if not more, than the other taxes you pay. So now, we're going to talk about baskets. But when we start to talk about the baskets, general income and passive income, wow. So now we're going to talk, we're really talking about it relating to the indirect subsidiary, okay? So right now, there are two types of baskets, general income and passive income. So let's have a look at that, all right? And so, indirect foreign tax credit is allowed by the US. Now, what do you mean? It's to indirect foreign tax credit is a credit for indirect, that is credit for subsidiaries. Okay, before we just looked at direct. See, direct credit or direct deduction. Now we're talking about indirect subsidiary, okay? All right, subsidiary, okay? It's allowed by the US on foreign taxes paid by a subsidiary US company before tax amount of the dividend. And however, there's a qualification of indirect foreign tax credit, a US company and a minimum of 10% of voting stock. That's why there's a strategy of some people overseas is to just have 9.5% of voting stock. Okay? And then they partner with a non-US citizen that has 90.5% voting stock. So then the subsidiary can be deemed as a non-US subsidiary. You with me? All right? So there's a strategy there, all right? But you have to trust that other partner you're working with very well, okay? All right, the partner's got 90%. Wow. You know, you have to trust them, okay? All right. Be brothers or something like that. Yeah, okay. There's other issues involved. Okay, you have to be, and it has to be with a non-citizen, right? Because if your partner's also a US citizen, well then it's going to be counted, right? Because the partner's got 90%, all right? So let's keep moving here. I'm just throwing in ideas, all right? So there are bilateral agreements of taxes of individuals in one country, okay? And the income earned in another country, and it's alleviate, like we said, the idea of credits under treaties is to try and alleviate double taxation, facilitate trade, information sharing, helps domestic enforcement. Okay, we know all these things. Does it happen? Well, there's a model treaty of OECD, and they talk about 5% of indirect of direct investment dividends, 15% portfolio dividends, 10% of interest. These are withholding tax. Remember, a withholding tax is an immediate tax, but it's temporary. In other words, after you do your tax return, then it comes included in, okay? So you may get some of that back, but the minute you pay dividends, they take the withholding tax. You work out later whether you owe it or not, okay? So withholding tax is not an additional tax. It's just a tax that occurs at the time that you made that dividend payment, that you make the interest payment, not at the time you do your tax return, okay? So, for example, if some of you open up an E-Trade account and you have foreign stocks, so you fill out a WEN form to allow you to actually trade in US securities in the US. And so those securities pay dividends to you. But very few of you will ever go to the US to pay your annual tax, right? So the US will have a withholding tax on their dividend of 20%, whatever. Okay, they just take that. And you probably won't care about getting it back because you're not going to file a tax return in the US. You see what I mean? So that's another purpose of a withholding tax for individuals that are investing across countries. Let's keep moving. So there's all the treaties that Hong Kong's trying to negotiate with different countries, okay? So it's going on lots. Okay, so we've got US tax treaties, and this is where we get to our last one, okay? There's a 0% withholding tax on interest and royalties, 15% on dividend payments. That means if I have a company in the US and pays a dividend to me, they immediately take 15%. Boom. Okay? But they have treaties with over 50 countries. One notable exception, Brazil. Lack of Brazilian investment in the US. Okay? So what some Brazilian companies did, they set up a third company in, I think, owned by Norway in one of the islands near Cuba. And that had a tax treaty with the US, but now the US has stopped that too. Okay, because then they use that island to actually get that US tax back by having a company in that other country, right, that third party country. All right, treaty shopping, that's what I mean by treaty shopping. You find a third country that has a good treaty with the US, and then you physically send a shipment of goods maybe from China to the US, but you invoice you send invoice to the third country and you get that third country to invoice the US, you see? And so the tax credit comes back to that third country where your subsidiary is located. You with me? All right, so that's what sort of, more about that next week, transfer pricing, lots of